It's great to be here, and it's great to have that challenge to think about what's more important for the reopening of the economy. So let me start just by giving you some views on how the growth outlook is going to evolve over the next 12 months or so. So here, what I'm looking at is I'm giving the level of GDP in New South Wales, Victoria, and the rest of the country a value of 100 back in June 21, and tracking what we think has happened in the September quarter, where we've got New South Wales contracting by around 8%, Victoria about 6%, and the rest of the country tracking along modestly. And then, of course, in the December quarter, we start to see the turnaround. So we're still going to be in negative territory relative to June, but New South Wales and Victoria, I think, will gradually pick up in that December quarter. I'm expecting the real momentum to build in the first half of next year. And over the course of next year, I'd be looking for the nation to grow by 7.4%, New South Wales by around 10%, and Victoria around 8.8%. So a very, very strong growth story for the Australian economy next year as we reopen. And it'll be particularly driven by the spending of the household sector. One of the things that we use to track economic activity is what we call our card tracker. Now, a card tracker looks at turnover in credit cards for all the millions of transactions that Westpac and the subsidiaries do every day, so every week. And we get this data once a week, and it's very, very live frequency. So what you can see, for instance, is in Victoria, it's been a very jagged, uncomfortable run. You've seen a number of huge short-term shocks, big negatives coming through. But we're starting to see the Victorian story finally get into positive territory. New South Wales went in before Victoria and has come out before Victoria. And of course, the good story is the strength in Queensland and Western Australia and South Australia. So the message is that, yes, there's a lot of pain that New South Wales and Victoria have suffered, but we're starting to see some early signs of recovery. And we can dig more deeply into this turnover by looking at particular industries. So what we've done here is we're looking at card turnover on airlines and travel agents. So what you can see, of course, is that see the huge collapse that we had during the first lockdown and how things bumbled along the bottom, and still we started to see some modest recovery in October, November, December last year, and then a drop back in those lockdowns in New South Wales, a strong recovery, and then, of course, the disappointing slowdown again. But the good news is that we've really started to see a turnaround in card activity amongst airlines and travel agents. Obviously, most of this is forward bookings, but it's indicating that we have turned the corner. But of course, there's a long way to go. We're still only at an index level of about 60. And before COVID, that index level was running at 120. So good news that things are turning around and bottomed out, but a lot further to go. If we look at the same numbers for airlines and travel agents and split them up, red line airlines, black line travel agents, we can see the big fall and then the coordinated recovery. Not so good for car rentals and hotels. So car rentals and hotels really haven't seen that turning point yet. And I guess that's because in the airline and the agent business, there's a lot of forward bookings, whereas in car rental and hotels seem to be more time for the present. So we haven't seen that turning point yet. But the good news, of course, is that the downturn isn't anywhere near as deep as it was last year. For Australia, we can be incredibly optimistic that we're going to put the rest of the world to shame next year in terms of the way we're dealing with the virus. So in 2020, we were world leaders because of our great containment of the spread of the virus. 2021, we were laggards because we were slow with the vaccination program. 2022, we're going to be outstanding again. So we're projecting New South Wales and Australia here, the red line Australia, the blue line New South Wales, and we're comparing vaccination proportions of the total population with where we see the US and the UK. So the US and the UK, of course, started well ahead of us, the brown line and the purple line, but they're flattening out and we're just continuing to steepen. So it's a very good sign that I think Australia will be proud of a 90% vaccination rate for the adult population pretty soon, late this year or early next year, and that'll stand us in very good stead to ensure no more snap lockdowns and much more freedom of movement around the country. Let me now focus on interest rates and the currency. There's been a lot of controversy around interest rates in the last few weeks. We expect the Reserve Bank will start to raise rates in the first quarter of 2023, and they'll raise them 3 times in 2023 and another twice in 2024, getting to a peak of 1.25%. The Aussie dollar, we've been optimistic about the Aussie dollar. That 73 that you've got there is already up at 74 cents. We're expecting at least 75 by the end of this year and 78 by the end of 2022 and 80 end of 2023. Now, at the moment, the consensus view is a lot more modest than that. The general view is around 74 cents for the Aussie dollar next year. So we're more optimistic about the Aussie dollar. And of course, for those folks that are planning these overseas trips, the stronger the Aussie dollar, the better the trip. So why are we expecting interest rates to rise? Well, Australia is going to get a very, very low unemployment rate by the end of 2022. We're expecting it to get down to about 3.8%. We haven't been there since the 1970s. And that very, very low unemployment rate is going to start to put upward pressure on inflation and wages. And by the time we get to the end of next year, the Reserve Bank will have achieved its objective of 2.5% inflation, full employment, and wages growth getting up to around about that 3%. That'll be the time for them to ring the bell so that we can finally start withdrawing some of this emergency stimulus. And that would herald a period of a couple of years when interest rates go higher. So we would think by the end of 2023, the cash rate will be 0.75. The markets are a lot more aggressive at the moment. At the moment, the markets are saying by the end of 2023, 1.35%, and the end of 2024, 1.65%. So quite a lot higher than we're expecting. Many, many people, along with the Reserve Bank, don't think they're going to raise rates until 2024. But I think that might create some real challenges for the housing market. So why do we think that the peak in rates will be about 1.25%? It's really down to that debt servicing ratio, the proportion of your income that you have to use to service your mortgage payments. And because of the explosion in the amount of household debt in this country, you only need a rate of around 1.25% to get back to those high proportions that we saw in 17-18 or we saw in 09-10. Or even in 07-08 when the Reserve Bank over-tightened rates and we had this big collapse in the next few years alongside the GFC. So you might say, wow, those rates are low, and the market is saying, wow, those rates are low. The market's saying 1.65%. But I think we'll get away with a lower rate because of this huge level of household debt that we've got. And so why am I optimistic about the Aussie dollar? Take a look at the commodity prices that Australia is exporting. That's the blue line there. We've had this huge surge in coal prices, in gas prices, and even though the iron ore prices come off from around 200 down to 120, the overall index, that blue line, is holding up really well. And look where the Aussie dollar was last time that blue line was up around that level. The Aussie dollar was around parity, around around equal to $1. So I think Aussie has been undervalued. Concerns around China, concerns around central banks raising interest rates. But I think next year the feeling about the Aussie dollar will remain pretty constructive. And one of the things that I think will be a big supporter for the Aussie dollar will be that very high vaccination rate. So what's going to drive growth next year? It's going to be all about the consumer, about the household sector. And that's because they've accumulated so much savings as a result of the recent lockdowns, the ones last year, And those folks that don't normally save have got savings that they'll now be able to run down. And those other folks that save a lot won't have to save as much because their savings level is already high. So that opens up the possibility to spend at a much faster pace than income growth. Income growth will be very good given we've got rising wages and rising employment, but the combination of that is what will be driving the economy. And of course, a lot of that spending will go into the travel sector. What we have to remember, and in reference to the question about what's going to drive the economy, the international borders or the domestic borders, what we have to appreciate is that Australians spend a lot more money overseas than foreigners spend in Australia. So if you look at that red line and look at before it collapsed with the closure of the borders, in 2019, Australians spent 56 billion on overseas holidays, but foreigners only spent about 25 billion in Australia. So closing the borders actually boosts some forms of activity. So we've seen renovations and additions up nearly 50% in New South Wales and nearly 30% nationally. And we've seen a huge lift in spending on durables, TVs, because this money has been captured. So actually, opening the domestic borders frees up travel, frees up spending, which is an unambiguous boost to the economy. Opening the foreign borders in the short term, more money flows out to be spent on overseas holidays than we get from foreigners coming back into Australia. But of course, in terms of, that's just a growth number, in terms of welfare and in terms of freedom and all these positives that we need to say that Australia represents, we need to open both borders. Finally, on housing, the big story on housing has been the huge lift in new lending to housing. The line to watch there is the red line. That's new lending to investors. So new lending to investors has been strong, but it's been outstripped by new lending to what I would call upgraders, people that own a property that want to upgrade their property. And in previously, first home buyers, the black line, they're already starting to leave the game. And we're left with very strong upgraders, but investors who normally are, when you've got a real boom, investors are 40 to 45% of new lending. They're only at 30% at the moment. So the next stage of the housing boom is going to come through investors. What will happen, however, if we're right on our forecast for house prices, there's going to be a squeeze on affordability. So if we look at the red line there for Sydney and the blue line for Melbourne, affordability is measured as the proportion of your income needed to acquire a deposit and service your loan. We're expecting further rises in house prices, and the Sydney affordability level, that red line, will go to a peak that we've never seen before. And that signals that at some point the market will have to slow down. Melbourne will get within that peak, and you saw what happened when those peaks were achieved in the past. You've had a pretty substantial improvement in affordability that's related to falls in prices. So what do we think is going to happen with prices, on house prices? Well, if you look at 2021 year to date, that's to our estimate for October, so year to October, Sydney's running at 24% already. We expect that by the end of the year, Sydney will be 27% for the year. That's the biggest year that we've ever seen. Melbourne, we think it'll be up at 18%. Brisbane, 22%. Perth around 15%, and nationally 22% growth in house prices in 2021. 2022, things will slow down a lot. Interest rates, the spectre of rising interest rates will start to impact people's thinking. The regulatory authorities are starting to get involved and starting to limit certain types of loans, and we'll see more of that. So Sydney next year, 6, Melbourne 8, Brisbane will still do remarkably well. And then in 2023, when those interest rates do start to rise, that's when the prices will fall. We expect Sydney to fall by about 6, Melbourne 6, nationally by about 5. You might say, gee, 5% doesn't sound like much. We've only had a couple of years where prices have fallen by more than 6 or 7%. One was 17, 18, and another was in the GFC. So 5% is still quite a big number, but as you say, it's coming on top of about 30% in the previous 2 years. So if I'm going to be wrong, and if the markets are right, and interest rates go up a lot more quickly than I'm expecting, then you can probably expect to see more pain in that housing market. Well, thanks very much for the chance to talk about the travel story, the borders, the interest rates, the currency, and the house story, all of which have direct impacts upon people's preparedness, ability to travel. Thanks.
Fantastic, Bill. Thanks so much. Some amazing insights there. And one thing I took away from the very end is that I'm very thankful I live in Brisbane, because we can still have some sort of house affordability up here, and we're still going to get some growth next year. But some great insights around. It's been a beauty, hasn't it? So thank you very much. Some amazing insights around travel and the housing. I've got a couple of questions for you. We've still got a couple of minutes, if that's okay. So I've got a question here from Sophie. It says, do you think Australia's economy will ever recover from COVID, and how long do you think that will take? I guess maybe what is recovery from COVID? So can you speak to that?
Well, I think the issue is that I heard a little snippet yesterday that there's something called Delta Plus that they're finding in the UK at the moment. About 7% of the cases of this Delta Plus. So we're still uncertain as to whether there'll be other strains. That as we defeated Alpha last year, Delta came along. The question is, will there be other strains? If we've dealt with the other strains, then I think we are through the COVID issues. I think that it's really a matter of what we see at the moment, we're able to deal with. If we were to see further new strains, then of course, everything changes, and those growth numbers I'm talking about will change. And the real risk is if we start to see the hospitals getting overstretched.
Yeah, we are starting to see a bit of talk of booster shots in places like the UK and the US already. So maybe that's the next step for us here in Australia.
And that won't be any problem. I think all of us that have had our doubles, the reaction after the first one was a lot worse than the reaction after the second one. So I think that we'll find that people won't be too frightened about lining up for their boosters if that's the way out of this issue.
Let's hope so, hey? Let's hope so. Another question around which state was economically the worst affected by COVID over the last 19 months?
Oh, look, I think we have to see Victoria. We know Melbourne has got that dubious tag now as being the most shut down city in the world. And of course, that's weighed very, very heavily on Victoria. But our forecast is that New South Wales contracted by 8% in the September quarter, Victoria by 5.7%. But of course, they had that other big contraction last year when New South Wales was open. And they've had a number of other very painful shorter lockdowns that really showed up in that credit card turnover data when Victoria was going one way and the rest of the country was going in a different direction.
Yeah. And one last question from me, Bill. You've obviously done a lot of economic briefings over the last 19, 20 months in these unprecedented times. How many of them have you got right?
Oh, look, I think we're all surprised at the pace at which the economy recovered last year. I think we've all been pretty right about the fact that interest rates had to go down further and stay low. But now there's a real difference of opinion about the interest rate outlook. I would say most other economic forecasters are believing the Reserve Bank that is saying they won't raise rates until 2024. We're being fairly bold and saying in the first quarter of 2023, and the markets are now telling us 2 rate hikes at least in 2022. So there's a huge spectrum. And of course, what happens to those interest rates will directly affect that housing story significantly, and will also affect people's confidence and their preparedness to run down that high level of savings. So it's that interest rate story that's really very important now.
Yeah, great. Fantastic. Bill, thank you so much. I follow you online. You've always got great insights and you're generally pretty right. I just thought I'd poke you a little bit there at the end. But thank you so much for your briefing. Thank you so much for your answers. And let's look forward to an amazing 2022 here in Australia.
I think we're looking forward to a good one.